Hi guys, welcome to Budget B, and today we're talking about risk, investment duration, as well as economic factors that might affect your money. So let's start off with risk. Now, it's very important as an investor to understand the risk that you are taking before investing into a certain asset or an option. So you have certain assets that have higher risk, and then you of course have those with no risk, or that are classified as no risk, although it's more of less risk. So you have things like your bonds, which are really low risk, and we will have time to really just tackle the investment options at another platform. And then you have your equity or your forex or a Bitcoin investments that you find with higher risk. So again, it's very important when you're investing just to understand, are you risk averse, are you risk neutral, or you just like risk. Especially when you're younger, you tend to like more risk than when you're getting older. So you need to understand what type of risk investor are you. Risk averse, risk neutral, all up to you to determine which option you're going for. Now let's talk about risk investment duration. So on investment duration, again, you need to decide as to how long do you want to invest into a specific stock. How long do you want to invest into either unit trust or invest into bonds? So you need to understand, is it 3-year duration, is it a 12-month maybe treasury bills that you're investing into, or are you going in long term, which is 5-year plus? You need to again understand, because your profits or your waiting, your patience will be dependent on what is your investment duration. So we really just need to understand as to, I'm taking a lower risk, my investment duration is 5 years or more, and then you sit comfortably even during market volatility because you have a long-term duration, investment duration. If of course you have short-term, that's when you get most of the guys more trading than investing. So there's also a difference between that, and we'll also cover that at a different platform. So let's talk about economic factors that affect your money. Now, some of those, which obviously you still have plenty more others, but today I'm going to focus on inflation and of course interest rate that does affect your money. So inflation on the first hand is prices continues going up, inflationary, and your money is being affected in the sense that your real return on investment is less given whatever interest rate you're investing at. So if you're investing in an asset which is 7%, for instance, and inflation goes up from 4 to 6, that means that your real return is close to about 1%, just rough calculation. So again, you need to understand what is the impact of inflation on your investment, and also given whatever interest you're taking on your investment. Very important. And then of course you need to look at interest. Most of the time people focus on interest 7%, but they tend to forget management cost. So let's say again, your interest rate, you're getting an interest rate of 5%, then your management cost is about 1.5%. Then again, you're getting less actually from that. So you need to understand, yes, you're having a high interest rate, but what is the management cost on that specific investment? And again, you need to take into consideration, of course, inflation that might still eat up your real return on investment. Sometimes it sounds nice that you have gotten an extra $1,000 on your investment, but if you take inflation into consideration, it can actually be way lesser than what you have put in, or just less than what you would have gotten from your investment had inflation been low at that point of time. So guys, that it is on risk, on investment durations, as well as economic factors affecting. Of course, there are more economic factors, and we can always tackle them as you comment, subscribe, share, and like the video. Till next time.